Monday, October 14th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about how the Chinese gold market is on its way to take over the world gold market, and how that, in my opinion, could be a good thing. You might say, oh, we don't want the communist Chinese to take over the gold market. Well, but I would say the Anglo-American axis has controlled the gold market since 1919, and look what they've done to the gold market. The gold market, COMEX LBMA, is a paper market that is highly leveraged, probably even 100 to 1, some would say, maybe less, but it's definitely not a physical market. COMEX, I worked as a futures broker for over 20 years. I never saw anyone take physical delivery of the metals. LBMA is supposed to be a physical market, but it's more of a trading market as well, of a paper market. So if anything, this could be a good thing. There's been a lot of talk lately about a launch of a new Shanghai Gold Exchange futures contract on COMEX, and I want to talk about that and give my opinion on why I think it's actually quite positive for gold, this development. It started out last night, these contracts, and a lot of people have just focused on the fact that there's new contracts on COMEX. But it wouldn't make sense to have a non-deliverable contract on COMEX called the Shanghai Gold Exchange gold contract without it having a link to the Shanghai Gold Exchange. And that's what it does have. And I'm going to go through an announcement in September by the Shanghai Gold Exchange and the Chinese authorities, how they see the launch of this contract on COMEX together with the launch of their own contract. I also want to look at Brexit and what's going on in the foreign exchange market, especially with the British pound. And at the end of the video, I will look at the markets briefly. So yes, there's been a lot of speculation about this new contract that some people were saying, oh, COMEX is going to get even worse. The Chinese are going to help manipulate the gold price. It's another paper contract. But I've done a little more digging. I wanted to see if there's a new contract as well on the Shanghai Gold Exchange, which is a totally physical market, right? And there is. So I went to their website and I found this announcement. So let's go through it. And this is from September 12th. SGE, Shanghai Gold Exchange, to launch NYAUTN contract, a cooperative project with CME Group. So let's go through it. It says, in May 2019, Shanghai Gold Exchange and CME Group signed a bilateral product licensing agreement. According to the agreement, SGE licenses CME Group to use Shanghai Gold benchmark price to develop futures contract, and CME grants SGE a license to launch new T+N product based on COMEX Gold Futures Asia spot price. So you see, the SGE is also going to use COMEX, not just the other way around. So it's a cooperation. On October 14th, 2019, SGE will launch new T+N contract based on COMEX Gold Futures Asia spot price. At the same time, CME Group will launch Shanghai Gold Futures contract based on Shanghai Gold benchmark price. It says the new T+N contract to be launched by SGE is denominated in RMB with a contract size of 100 grams and RMB conversion price of COMEX Gold Futures Asia spot price as its final settlement price. The Shanghai Gold Futures contract to be launched by the CME Group are denominated in Chinese yuan and US dollar respectively. The contract sizes are both 1 kilogram, and the final settlement prices will be Shanghai Gold benchmark price in the afternoon session on the settlement day. This is the important part here, and this shows how, in my opinion, this is just another nail in the coffin of the petrodollar. Am I saying the dollar is going to disappear? No, but the RMB or yuan, whatever you want to call it, is becoming more and more important. And this is what the Chinese exchange says and the authorities. It says, in recent years, under the guidance of the National Opening Up Strategy, SGE actively carried out market-oriented and internationalization strategy, with the international board acting as the platform and Shanghai gold benchmark serving as an effective means. SGE consistently promotes cross-market cooperation with major international financial centers. The cooperation between SGE and the CN Group this time is an in-depth cooperation between the world's largest physical gold market and the futures market. So the Chinese see themselves as the largest physical gold market, right? So what I'm trying to say here, it can't be a bad thing for the physical market. And the physical market is the real market for gold, not the futures market. The Chinese don't say that, but because they're more diplomatic, maybe they could have said the paper market, right, instead of the futures market. It will effectively motivate cooperation and integration between domestic and foreign gold markets and provide convenience for both overseas institutions to participate in domestic financial market with CNH, Chinese yuan, and domestic investors to indirectly invest in the international market with Chinese yuan. CNH is RMB. The cooperation also effectively enhances the global influence of the RMB denominated gold price and intensifies the international voice of China's gold market, contributing to the internationalization of RMB and building Shanghai into an international financial center. So those comments there are really interesting. Enhancing influence of RMB denominated gold price, the physical price, right? And also building Shanghai into an international financial center, right? Taking the baton away from New York and London, right? So I think this is actually positive for the gold market. Of course, it's not going to change things overnight, but I think personally it's positive for physical gold, and it will help price discovery for physical gold, as I think gold futures and the LBMA, they don't reflect the real price of physical gold. There's been too many shenanigans in the paper market, as we know. So there you go. That's my opinion on that. Yesterday as well, on Brexit now, big headline came out yesterday in the FT. Brussels baffled by UK proposals on Brexit deadlock. And I said at the time that I thought, well, cable was going to lose a lot on the open last night. And it didn't, though. But now it has. So the pound now is down 0.2%, which is not surprising. Basically, the EU is saying that the proposal to have Northern Ireland in the EU Customs Union and in the UK Customs Union is too complicated. Doesn't make sense. So things are not as easy as we thought it was going to be to get a deal by the 31st. And actually the EU negotiators, the EU diplomats are saying that it's getting very, very tough, and that the UK doesn't have much time. It has to complete the negotiations by the end of this week. There's an EU summit, right? So I just wanted to touch upon that. So yeah, the pound right now, it's 7:45 a.m. London. The pound is at 125.76. Still well elevated compared to middle of last week when it was at 122, but it's dropped 70 pips or just over 0.5% this morning. So what about gold? Well, spot gold is down $1.50 at 1487.50. Range has been 1482 to 1490 overnight. Silver is up a couple of cents at 1758. Range has been 1742 to 1764. The Dow is still fairly firm. It's up 44 points, 26,853. S&P 2973, up 5 points. So stock market up just over 0.1%. NASDAQ 100 futures, 78.52, up 0.2. I read an article yesterday from Northman Trader on Zero Hedge, and he's talking about how there's a battle between the people that think the Fed is always going to come to help the markets, and the people who are interventionists, and a battle between like the business cycle, that business cycle will win over interventionism. He thinks that's why we've had this massive top since 2018 in the stock markets. And that's where the battle is. The other thing he pointed out, a lot of the broader indices, like the value line geometric index, like the transports, Dow transports, are not confirming new highs like the major indices have confirmed. So he doesn't think that's a good sign. But anyway, I've said where the pound is. Euro is down as well versus the dollar, 0.1% at 110.25. The dollar is down 0.2% versus the yen at 108.24. And the dollar is down 1/3% against the Chinese yuan at 706.50. Crude oil down 1.2%. WTI at 54.08. Brent as well down 1.3, a little more, but 59.50. So oil doesn't seem to be getting any traction in spite of what's happening in the Middle East we've seen in the last few weeks. The other day we saw an Iranian tanker being hit. Nothing really getting oil to move higher. And as we've seen in the past 2 years, when oil is going down, the stock market goes down as well. So that's not great for the forces of intervention, right? Bond market, to finish off, 10-year yield is up 2 basis points at 173.5. 2 years at 160, up also just under 2 basis points. One thing I would say, bond market is very volatile recently, and that's also not a great thing. Especially the treasury market is supposed to be more, how can I say, risk-free asset, safe haven, right? But I'm seeing a lot of volatility. There you go. Chinese gold market, I think, is taking over or becoming more important. And this new contract on COMEX and on the SGE as well. Don't forget, there's another contract there. I would say, if anything, that's positive for the physical gold market, because we know the Shanghai Gold Exchange is a physical exchange. And I think this will help more Shanghai than the paper market on COMEX and the LBMA. And you might ask, what's the LBMA got to do with it? Well, the people who run COMEX, the bullion banks, they also run the LBMA. They use the futures to manipulate the physical price, right? By manipulating the paper price on COMEX. COMEX is a bucket shop. I would say the Shanghai Gold Exchange isn't a bucket shop. It's an actual physical market. So there you go. That's my opinion on it. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.